Ladies and gentlemen, welcome to DelfinGroup Investor Webinar. Today, the CEO of DelfinGroup Didzis Admīdiņš and the CFO Aldis Umblejs will walk us through the recently announced unaudited financial results for 2023. While we'll be listening to the presentation, I encourage every one of you to share your questions in the Q&A section on the bottom of your screen. Questions can be submitted either anonymously or with your name. This session is being recorded and will be available for rewatch shortly after the call. That being said, let me hand over to Didzis and Aldis.
Thank you, Eva. Hello, everyone. Hello, our shareholders and our investors. Today we will present unaudited results for last year. And today here is Didzis Admīdiņš, CEO of DelfinGroup, and Aldis Umblejs, CFO of DelfinGroup.
Hi.
And I have to say that last year was really quite fulfilled with events, with new products, with innovation, and also I could say that it was quite good for financial results side of you. Yes, and today we will tell you about our key results. I will show you our key results of last year and also about business highlight of last year. And later Aldis will comment on business performance, and also we will be glad to open to answer to your question. So if you look at on last year on last year's numbers, I could say that it was quite good, because as you see that there is no single digits, only like double-digit growth. And if you look at consumer loan and on our credit business lines, I could say that last year was quite good, plus 13% for consumer loans and plus 20% for phone loan segment. And that corresponded to plus 32% for loan portfolio growth. And as we already inform our investors, already in middle of last year, we fulfilled our guidance, and our guidance for credit portfolio for last year was 77 million euro. And at the end of year, we reached credit portfolio of 89 million euro. So it's portfolio-wise, it was quite good year for our company. If you look at revenue, plus 41%, of course, it's mainly this revenue comes from credit portfolio for main two business lines, which is pawn loans and consumer loans, but also significant part there is a growth of revenue of retail. If you look at EBITDA plus 39% and profit before tax plus 14%, there is quite good development of those key results. But also I have to explain that there is a difference of EBITDA growth and profit before tax growth, as you understand, the main difference there is because of interest rate increase, and also the total interest which we paid for our liabilities. But actually, looking forward, we are quite positive on the interest expense side, because from now on the interest rates will go down. If we go more detail into our business segments, first of all credit business lines. One is consumer lending, plus 47% of income increase, and plus 21% of income increase for pawn lending. Of course, it's because of credit portfolio growth. And if you look at retail revenue stream, the main reasons why we managed to so significantly increase the revenue from retail is one reason is that we managed to buy more business to customer items from our clients because we developed that business line, but also we managed to sell more via our internet shop, and we have like very good improvements how much we sell items via internet shop, and also we like improved our other two retail business lines, which is like electronics and also jewelry. So very like good improvements if you look at revenue side of our business. Talking about key results of how it all looks together. Yes, as I already tell that we have like quite good improvement year-on-year basis on loan issuance levels. If you look at quarter-on-quarter basis, you see that it's quite stable for last year. And the one reason is because we managed to like very good increase the credit portfolio, and this which I already explained that already in the middle of last year we like exceeded our guidance for last year. So we were able to like credit the better customers, and let's say in jargon to like pick the best customers. And the very good like outcome of that is also that credit portfolio is very solid and very good performing. If you look at revenue or quarter-on-quarter basis, you see that it's almost like correlates with loan portfolio, and like it's very good improvements. And if you look at credit portfolio and also revenue, you see that it's almost for credit portfolio, it's more than double if you look at the point when we had our IPO, and also like almost double from in revenue side if you look at the moment we had IPO. If you look at profit before tax, you see that we also had like very good improvement of overall profitability. Our guidance for last year was 8 million euro, and we exceeded that. And the result is 8.3 million euro, and that's I could say I evaluate it as a very good result, and actually that was despite this larger interest rates, and actually it was like best year for the company, and also the last quarter was best quarter for the company. So if we go more into like details for our business highlights and our business performance, I want to say that in business side we focused a lot of technology in the last year, and also for innovation. And actually we like innovate in every of our business lines. For example, for pawn loans, we are working on a solution for digital pawn shop. It's at this point it's not already in launch, but it will be launched very soon, and that will allow our clients, our pawn loan clients, to get this service online. And also, if you look for innovation in consumer loans, then there is a mobile app, there is like virtual credit card, and so on. And also for retail, there is like a lot of like improvements. One is like new online platform, and also like solutions inside this platform. But now I will tell briefly a bit in details. Yes, one thing about business highlights and of last year, one of our largest projects of last year is like a business expansion to Lithuania. And last year, on December, we launched operations in Lithuania, and and we opened like 5 branches in December, and we introduced our product of pawn loan in Lithuania, and also retail in offline stores. And early this year, we also introduced internet shop in Lithuania, and also jewelry sales. And if you talk about the strategy in Lithuania, then mainly the strategy is that we will like expand our branch network in Lithuania, and also we will introduce new product lending products, and it's the product portfolio will be mainly the same as in Latvia, but we will of course adapt it to Lithuanian market. Um, if we talk about other innovations, I already like mentioned about mobile app. Actually, we heavily invested in the mobile app, and that we are, let's say, kind of turning a company like to be like mobile first organization, because very soon will be more and more services available in our mobile app. And one of the first, of course, is this, and one of the reasons why we developed a new mobile app is that we introduced the virtual credit card in mobile app, and that is like important solution for our business development, because one thing is that we can like get like new client segments with this solution, which is not our clients at this point, but also we can utilize the credit limits for our clients, which is not used at the moment. And with this solution, clients can like make purchase online, but also offline by paying with like Apple Wallet or Google Pay. So this product we introduced very early this year, and at the moment it's not like significant part of our consumer lending business, but we will like increase credit portfolio for this product in this year. If we talk about improvements and development of our branch network, I could also say that last year was quite fulfilled with new branches and with new concepts of new branches. Actually, we opened that Banknote XL, which is like largest pawn shop in Baltics. It is like large pawn shop with a large shop. And actually we see very good client interest, and clients are coming, and we have a lot of sales in this particular pawn shop. And also we have like this Riga city pawn shop, which is already more than 200 years long history, and we relocate this pawn shop to new like very beautiful premises in old Riga. And also this is like a very good improvement, and we get like very good traction from tourists in Old Riga from this pawn shop, but also like from regular clients. And also we just launched a new branch in Mārupe, that's near Riga, and also introduced new branch in Jēkabpils. And of course, the 5 branches in Lithuania, which I already mentioned. If we talk about online store and the retail development, we have the very good year for our online shop. We more than doubled actually the sales via our internet shop, and also like in revenues point of view, and also from count wise. And actually last year we introduced also a new platform for internet shops, and it works quite good. And And at every given moment, actually clients can buy more than 50,000 items in our shop. And it's like almost every item which we are selling in our branches is also in the internet shop. And we see like very good interest from our clients for our internet shop. And also as special gift for today's listeners, we did like a special promo code for you, which is on the screen, and you can use like our shop and try it out in Lithuania and Latvia and get 15% discount for 1 week. And you are more than welcome to share this with your family, friends, or colleagues. And also talking about this year hot topic, artificial intelligence, I could say that we are investing quite heavily also in artificial intelligence. And one thing there is that we are like teaching our colleagues and our employees how to use it on everyday basis, and that's mainly like popular solutions like ChatGPT. But also we are like investing in like tailor-made artificial intelligence solution. And one thing which we already introduced is like AI solution for internal documentation. Actually, we, as like regulated market participant, we are quite we have quite many like internal procedures and politics and documentation. It's almost 200 of this kind of documentation, and like there is like 100 of procedures totally for front desk employees. And with that kind of solutions, we have made the process for them more efficient. And what does it mean? That does it mean for maybe some work which we previously take like 5 minutes? No, it takes only like 1 minute, and it's like very efficient for them. And they don't need to like know every procedure like previously. And we also are working on AI solutions for our internet shop, and that will allow also us to be more efficient on how long does it take to like put some item for sale, because those like 50,000 items for our internet shop, they all is almost unique. And that's quite different because we are working like with pre-owned goods. So like there is already some investments in that, and we like looking very positive on that, and we will continue to invest in this kind of solutions to be more efficient. And before I give a screen to Aldis and with business results, I want also to like share information and with our improved mission and vision and values. And actually, we like focused more on our value side, and also we like improved our like vision. And I actually really like and I really trust these values which we have, and it's actually deeply inside in our everyday work. And also our vision to be the best place for everyday financial service and circular retail is mainly very like focused on that, what we do and what we want to be in the future. So I will give a screen to Aldis, and Aldis will explain about business performance.
Yeah, thanks, Didzi. Okay, going forward, I will touch upon the business results, and to start with the consumer loans. And as the slide shows, our consumer loan portfolio has grown significantly during the last year, And at the end of the last quarter, the net loan portfolio was 81.6 million euros, a 33% increase from 61.2 million euros at the end of the previous year. The growth of the portfolio was driven both by the increase of the active client numbers as well as the increase of the average loan amount that grew by 20% on a year-to-year basis and was at an average of 1,837 euros at the end of the last quarter. The NPL ratio remained flat during the last quarter and was 1.6%, and we are happy about that. And as you may know, we have communicated earlier that during the last quarters of last year, DelfinGroup was focused on improving the quality of the loan portfolio. And as already during the middle of the year, we reached our target for the loan portfolio. The age analysis of the consumer loan portfolio illustrates that the quality of the portfolio has actually slightly improved when comparing to the last year. And the low proportion of the delayed loans can serve as a proof that our outstanding portfolio reflects its recoverable value, and that in fact what we have on our books can be recovered from our clients. The pawn loan portfolio slightly increased at year end and was around 4 million for the last last 3 quarters. And although given the specifics of the product, that it's actually a short-term product, an average of 31 days, and also that the size of the market is smaller when compared to the consumer loans, nevertheless, we managed to increase our revenues from the pawn loans by 21%, and the portfolio, the amount of loans issued grew by 20%. And what's also good that during the last quarter, the proportion of the repaid loans has increased, and right now is by 77%. Also, the sales of retail of pre-owned goods increased both in the last quarter and throughout the whole year, in both cases about 20%, and that's a record high for us. During the last quarter, we reviewed our inventory, and in order to promote the sale of slow-moving items, we launched a special sales campaign providing discounts to customers in order to sell these older items. And as a result of that, the gross margin for the last quarter was lower, 35%, but that was expected when we launched the campaign. And regarding this graph, I think I won't be going into much detail there, because the split of product categories haven't changed when comparing to previous periods, and the smartphones and jewelry are still our number 1 and 2 sellers. As for the diversification, then revenue-wise, obviously the consumer loan products are our main generators, and actually during the last quarter, the revenues of consumer loans grew slightly by 3%, and was 70% altogether. And also the revenues for the pawn loan increased. Yes, In this slide, I would like to provide our listeners more context on how the recent corporate income tax changes impacted our net results. As Latvians obviously know that there had been changes end of the last year when Latvian government approved changes to the corporate income tax law, whereby banks and non-bank lenders are obliged to pay 20% corporate income tax advance from the yearly profits starting from 2023. As opposed to the previous model where corporate income tax was payable when only profits were distributed. And as a result of these changes, DelfinGroup had to recognize an additional cost of 1.30 million euros that we did not plan initially. And although the tax relates to a full year, since the changes were adopted at the end of the year, so the full charge was recognized in the fourth quarter results, resulting in a decrease of net profits for the last quarter, as well as affecting the performance of certain financial ratios. And actually, given our view that this tax was unfairly applied to our industry, and since it's not fulfilling its stated objectives, we have engaged legal consultants to advise us on how we could proceed further on this specific matter. Short comments about the income statement. As this already mentioned, then we had quite a large increase in revenues, both for the last quarter and for the full year, 32% and 41% respectively. Also, obviously, given the increase of loan portfolio that is quarter by quarter, also the provisioning cost is increasing, but that's something we are fine, and that we have expected. And obviously, the corporate income tax changes. This is in relation to the change of the law that I mentioned previously. And altogether, that we were able to generate 2.3 million profit before tax for the quarter, again the highest for every single quarter up until now, and for the full year 8.3 million euros. That actually exceeds our guidance that was 8 million euros. We managed to increase our balance sheet by 36%, and that's mainly coming from increase in two positions. One of them is net loan portfolio, 32% increase there, and the other is cash balance. That's an increase by 150%, and the reason for that being that at the end of last year we managed to sign a new loan facility with Multitude Bank, and these were the funds coming in from them, as well as from sale of some of our new bonds. But the cash balance was decreased later on and was used for loan issuance, as well as to refinance some of interest-bearing liabilities. And on the liability side, we increased our equity by retaining profits, as well as borrowing externally to fund the portfolio growth. For the financial ratios, we see some negative changes there, but these are mostly due to the corporate income tax changes, as I mentioned. For instance, both equity ratio and return on equity decreased because of the additional cost in the fourth quarter. But although it's for the full year, it's booked on the fourth quarter, so the numbers on the last quarter are affected unproportionally. When considering the cost of interest-bearing liabilities, then I believe we have reached a maximum there. since the Euribor rate raise has stopped, and the market expects a decrease during this year. So accordingly, we expect also to see a decrease in total financing costs within this year. And although the cost of income ratio was slightly higher when compared to our expectations, then this objectively happened during because of the unexpected rapid growth of the Euribor rates that happened during last year, and similarly to the interest-bearing liabilities. With the decrease of the borrowing rates, we expect to see also a further improvement there. For the capital structure, we are continuing employing a balanced structure, having bonds, equity, Mintos as our source of funding. And as mentioned, during the last quarter, we also added the bank financing. And right now, at the end of the year, it accounts for 7% of our capital employed. And during the November, we repaid our 10 million bond emission. And to do so, we issued another new bond with a 15 million value that is still outstanding, and we expect to finish that within a short period. And altogether in 2023, DelfinGroup issued in total 3 new bonds, and actually we were the most active bond issuer in the Latvian bond market for sure, and then potentially in all of the Baltics. And also going forward, we will continue to be an active participant in the capital markets. When we turn to the dividends, then we are keeping our dividend promise and paying them out. And on the last half year, we paid out 2 payments in total of 1.8 million euros. And also following the release of the full unaudited results for the 12 months, we are proposing a dividend that will be decided by the shareholders in the next meeting. What I would like to mention that in the respect of additional dividends for the full year, then just recently we made a public explanation regarding this on the procedure for paying out annual dividends, and I would like to let's say point out that the decision on an additional dividend for the 2023 will be made by the management board of DelfinGroup following the audited results and annual report after we have released that, and we will take into the context the company needs and long-term development strategy. As for the share performance, then this was not satisfactory throughout the last year, but in my opinion, the reasons for that are somehow unclear to me. That because DelfinGroup delivered strong performance over each of the quarters on the last year, but nevertheless, the market did not pick on that. Also, our fundamentals of the company are strong. The capital is increasing, and so on. Sure, I can see that maybe geopolitics and potentially the war might have some effects, as well as the size of the market. Also, I have read that some analysts suggest that due to the higher yields on the bond market during the last year, part of the funds have transferred from the stock market and moved to the bonds for better yields. But nevertheless, we believe that the share price does not reflect the fair value of the business, and the shares are undervalued. Yes, and that would conclude our presentation. And yeah, please subscribe to our newsletter. And as previously mentioned by Didis, visit our online shop and try this discount referral code. And now we'll be happy to answer questions.
Yes, exactly. Aldo, thank you. We have received many questions and they still continue coming in. We'll be taking them one by one. If any of you haven't submitted your question yet, please use the Q&A section that you can find on the bottom of the screen. So the first question, what interest rate do the bank loans hold? Is it secured? And why wouldn't you disclose the terms of the loan as for other debt sources?
I will answer that. To start with this is a secured loan, and it's secured with our part of our loan portfolio. Regarding the rates, I would prefer not to mention that, and the reason being that these are commercial terms, and I would love not to publish them. And what's different with our other lending sources? These are public. Our bonds are public, and also Mintos is public, and that's the difference why we publish the rates there, and why we choose not to do it here. But I can say that the rates are very competitive.
What are key business challenges and risks in 2024 and 2025?
Yes, I will cover this one. I think if we talk about like risks, I think one risk, of course, and maybe like share investors see that one is geopolitics, and that doesn't somehow change our daily operations, but the risk is here, and how like investors see that. And one other risk, what I can mention is like lower than expected interest rate decrease. That could be like one, like not a major risk, but there will be some impact on the bottom line.
Why are there so few loans offered through the Mintos platform at the moment? Will the supply increase in the future?
Okay, I would assume that the question relates to our loans, because I won't be able to answer why other loan originators are not posting loans there. But for us, actually, we are placing loans on Mintos when we need funding there, and so when the business grows, then we place more loans, and also if we have other sources of funds, we are not placing as many loans as maybe in other periods. And coming back, what I said earlier, at the end of the year, we attracted additional funds through bank financing, and we are using also that source of funds, and that's why at some point it might feel that there are lower amount of loans on Mintos from us.
Thank you. A listener would like to understand whether you'll be paying the annual dividends for 2023. Since you've covered this question during the presentation, I'll move on unless there's anything you'd like to add.
No, yeah, I would repeat myself again, what I said earlier.
Thank you. Are you expecting any new issues of bonds in the near future? What will be the yield?
Yes, we will be issuing new bonds as we have before. In fact, we have one bond maturing this year, and we will be refinancing that with another issue. Regarding the yield, I think it's too early right now to say what would be the yield. We would look into, let's say, the situation of the markets, what would be the interest rates there, if the Euribor has decreased or not, and that would be the aspect that we would take into account.
What is the status and how big is the new Lithuanian business?
I will cover like this. Lithuania businesses, yes, as I mentioned, we opened just in December last year, and we started with like 5 branches in Vilnius. And at the moment, from credit operations, we are offering there only pawn loans, and we are in the process to introduce our other lending products. And also there is like our retail and iShop. And as you know, for example, in Latvia, the share of pawn loan portfolio of all loan portfolio is about 5%. So mainly in Latvia, it's consumer loan portfolio if you look at our assets. And in Lithuania, yes, it's at the moment it's quite small, but it's growing, and we see like good traction, and we see like interest from our Lithuanian clients. And also, like I'm quite positive about Lithuania because if you look, for example, for pawn loan market in Lithuania, it's like quite fragmented. Like in Latvia, we have like some like professional large market participants, but that's not in case in Lithuania. There is like many and not so professional market participants. So we like see that some business opportunities here.
Thank you. Will every new bond issue trigger Mintos rebuy?
No, it will not. Actually, usually when we issue new bonds, we refinance some existing and use funds for that or new loan issuance. And only in the case if there is some additional say funds remaining, we are purchasing something. We could purchase something back on Mintos, but it's not a given.
Thank you. Now we have finished with the pre-submitted questions, and now we'll be taking one by one those received during the webinar. Do non-bank lending companies have to follow exact same customer solvency evaluation criteria as banks?
Actually, basically, yes, because it's regulated by law, and it's like for all the like market participants. For banks and non-banks, and it's like regulated. The regulator is Consumer Rights Protection Center for credit solvency check, and they are checking very focused on non-bank lenders, but also they are checking the banks. So basically, if we look from client point of view, it's basically the same.
Has there been increased necessity of loan restructuring lately? What proportion of the total loan portfolio are restructured loans?
As I understand that it's about consumer lending business. Actually, yes, we are like offering our clients this like we called it like a restructuring of consumer loan. But I have to explain that in our business, it's like not like when we offer this solution, it's like not that we are offering it's like in very like heavy like customers. We sometimes we offer this solution for customers which is like only like delaying like 15 days or 20 days, and we are not dealing with like with very like problematic clients. And in that solution we use debt sales with our partners, and we are like our politics is to and strategy is to keep the credit portfolio clean of these problematic loans. And I can't answer at this point how large part of our of our credit portfolio is this at this point, but it's not like significant part. It's like tiny part. These restructured loans, and as I said, it's not like in bank portfolios or in like credit like debt or this portfolios. It's like this is problematic like clients, but it's not like really really problematic and loans which we can get back. It's like some normal part of business.
Mm-hmm. How exactly is the pawn loan market share measured? Active loan portfolio numbers do not match with the reported market share.
Mm-hmm. About this, first I would like to explain that let's say that the proportion of our share, it's an estimate of from our side, because there is no like official like body that is measuring the share, and the difference might arise also because of how the data are reported by the market participants, and what is accounted under the pawn loan portfolios. Some of which might account inventories as pawn loans, some of they don't, and that could be the reasons why there's a difference, and you cannot say tight so easily.
Mm-hmm. Thank you. Are more inventory sales campaigns expected in 2024?
Yeah, actually, I would not call it like inventory sales, like some like a regular process, but of course we will like do some regular discounts like other retailers. We like there is usually some discounts at January, usually something at August, and something on before Christmas and so on. There will be like some regular campaigns, but nothing like unexpected.
What is more realistic growth scenario for pawn loan segment in Latvia? Organic or inorganic growth?
Uh, I could say that's more organic, and it's like somehow, as I see that pawn loan market in Latvia, it's like quite stable, and it somehow correlates with like economy growth of economy, and it's like not like picking up so fast as a consumer loan market. And actually, also, if you look at our assets, our credit portfolio, it's like small part of that, but still, it's like a very like important part if we look at our profitability. So talking about like market and how it will grow, so I expect that it will grow, and it will like correlate with average like salary growth and economic growth.
Is consumer loan issuance growth expected to recover in 2024?
Yes, I would not like say that it need to recover from something. It's like quite stable for last year, and as I said that we have like very good development of increase of credit portfolio, and we managed to like exceed our expectations, and that was the reason why we didn't like issue more loans, and that actually was our choice. And our philosophy is more like that we are managing our profitability, not market share. And but if you look how much we will issue, that yes, our aim of course is to issue more and to grow our credit portfolio, and according to our like budgets and our guidance. And yes, I see is that there is like strong demand for our products, and I see that it will develop very good, and I quite positive about that.
Mm-hmm. Jumping from financials to ESG, what particular ESG targets you have achieved in 2023?
Actually, yes, we are like one of the first such a large companies in Latvia which is disclosing this ESG like report and ESG targets. And actually, the things which we measure is like CO2 emissions, and actually we was in line with our targets on, for example, for CO2 emissions.
You have a large increase in intangible assets in 2023. What this stands for?
Yes, there has been an increase in intangible assets. I wouldn't call it large because the starting base was small, and any increase there seems large. But the reason for the increase of the intangible assets relates to our investment in technology, and for instance, the new mobile app and the virtual card that DIDS introduced, and other technological improvements. These are being recognized as intangible assets and are amortized on the longer period, as obviously we are using them to generate our revenues for the longer period as well.
Will there be a shareholder loyalty program, for example, discounts in an online store?
At the moment we are not deeply focusing on that, but we think about that. If there will be such interest, maybe we will introduce something like that. But there is one thing maybe we don't have so much large overlap of investor base and the products which we are offering. But of course, for example, for internet shop or offline sales, it could work. I'm not saying that we will not introduce it in future. It could be, but I'm not promising also at this point.
How much was the growth in new clients?
Okay, that depends. What is a new client? If you look at our customer base, it's we have 59,000 active customers at the moment. If you look at the loans which we are issuing, about 90% of loans which we are issuing is to repeated customers. So we have very strong repeated customer base. But of course, to grow credit portfolio, to keep the customer base active, you need new clients every month. And actually, for both our credit business lines, pawn loans and consumer loans, we see that there is very good interest from new customers. Despite that, for example, for our pawn loan customer base, we have in this customer base about more than 300,000 customers in our history. But still, we are seeing many new customers coming in. And of course, talking about Lithuania, there is mainly there. I could say that it's 100% new customers.
What will be your average interest rate to pay for borrowings?
I think there is no one question for that, because obviously that would depend on the type of the lending the borrowing and the term of that. But as shown in the financial ratio slides, then right now the blended rate for us is 12.2%. As said, I wouldn't expect for that to go higher, to stay around there. Obviously, for the bonds that we have already issued, that will depend on the Euribor rate, because we have floating interest payments there. But for attracting new funding, I would expect that to go lower, and the blended being 12 and below.
Thank you. If we assume a multi-year recession, how recession-proof is the business in terms of default rates? What does it take to break the business in case of a recession?
It depends on how deep recession could be. But if you look at our history of our business, and if you like look at, for example, COVID years and some previous recessions, then we see that our consumer lending business is quite stable, and we actually didn't saw any significant default rate increase during like those recessions. And actually, I could also explain that, for example, in our business and in the consumer lending business, our product is not so long as, for example, bank loans or bank mortgage loans. And when there is some like problems in the market, we can react very quickly, and our data science team can react to that, and we can change our underwriting really quickly. And that's actually the reason why you don't see fluctuations in default rates in our results. So that could be my answer on that.
Thank you. How do you characterize portfolio growth versus portfolio yields over 2023?
Actually quite good, because credit portfolio yields was in line, and I think maybe even better, because we see like very good increase in credit portfolio, and actually more than that increase in revenue.
How do you see your current liquidity situation, and do you need additional funding to continue growing in 2024? Which source of funding will you be preferring, Mintos or bonds?
Regarding the funding, yes, sure, we will need additional funding for one of them being to refinance existing maturing liabilities, and also to grow our portfolio, because as for the guidance, we still aim to have this 100 million portfolio, and we will need funds to finance that. The liquidity situation right now is good, and we are satisfied with it. And regarding the sources, obviously it will be a mix of both long-term funding as bonds, maybe some other sources, and then also Mintos.
How much OpEx growth should we expect in 2024, given your expansion in Lithuania?
Actually, we will disclose the information about the guidance for next years, and that's the level how much we can disclose on that at this point. Maybe I'll just add something.
Yes, we will be updating that for the whole group, taking into account, let's say, the expansion and the needs for the capital there.
Thank you. What rate do you pay on the Multitude Bank facility?
I see that's a hot topic. This question, it keeps popping up and again and again. Maybe there's somebody from other banks that's inquiring and trying to make an offer for us. But yeah, I will respond the same way, that it's these are commercial terms between us and the bank, and we would say like to keep that for time being.
Any future plans to expand the business to Estonia?
Actually, we are thinking about expansion, and as same as in Lithuania, we in the future it's you can expect that we will go somewhere else, and Estonia could be one of this market, but I can't at the moment disclose more about our future plans, and actually also about Estonia, but it could be one of our targets.
Have there been any debt sales as of late? Apparently, there is hardly any bids in the market.
About debt sales, actually, yes, we are using debt sales this forward flow session when we are selling the late loans every month, and actually we are using also quarterly debt sales. And doing that, we are like keeping our credit portfolio clean of these like unperforming loans. That's somehow, in my opinion, like good from shareholder and investor point of view, because there are not at any given moment there is no doubt about what's inside our credit portfolio, and that's like also our strategy on debt collection.
Mm-hmm. Unlike Estonia, there are no local owned banks in Latvia. In Estonia, we know that many companies that have been issuing loans and installments have become banks and successfully are now operating in the markets. Has DelfinGroup discussed this opportunity? If so, what are its advantages and disadvantages in it?
Actually, we have local owned banks in Latvia, but I understand it's like more the question is about like consumer lending oriented local banks, and we don't have like such kind of banks, but we have like foreign such kind of banks operating in Latvia. And if about like plans to becoming a bank, at the moment it's not on the table, like say like that.
In the last 2 years, pawn portfolio has increased significantly faster than pawn interest income. What is the reason behind it?
Okay.
Yeah, you can.
Yeah, I think it's not the case that that the portfolio is increasing faster as the income. Maybe this is some perception when we look just on the financial data and how we look on that. If we look at the yields that we monitor internally, let's say they are in line and increasing, and there is no decrease in the profitability of pawn loan products. The confusion might happen because of the classifications also of the products that we need to do because of international financial reporting standards that we are showing in financial statements.
I think maybe that's also that from accountancy point of view, because some of items which is already put up for sale is like in the portfolio, still in portfolio.
Right.
Thank you. There has been decrease of prices in markets of bad debt purchases. What is the impact for DelfinGroup?
Okay, I will cover this, and maybe Aldis then can add something. You know, there is no like market price for bad debt. There is like every like single case is like different case, and we have to think about this like that. Of course, generally interest rates and the market situation impacts that how like our bad debt is evaluated. But I can't like say that there is like a significant or like serious decrease of these sales. And as I mentioned, that it's mainly that's case by case. They are like evaluating our credit portfolio, the loans which we are selling, and that's work like that. There is not like market price for bad loans.
Thank you. 3 more questions to go. Have you considered any other platforms than Mintos for financing?
Yes, we have made some thoughts if it would be beneficial to be on some platforms, but we haven't up until now taken any deliberate steps in that direction. But yeah, we might.
Mm-hmm. Does the group have a business emergency plan? What key risks it addresses?
Yes, as I already like mentioned that key risks we see like geopolitical risk as one, and the other we see like the slower than expected decrease of interest rates. But if generally we talk about risk politics in our organizations, we are quite serious about that. We are working like all the time, I could say, with the all kind of risks which can affect our business, and we are like quite serious on that, and we have like exact plan for every for risk what could affect our company. That's our like regular business. Let's say that.
Do you see low free float as an issue? This is likely a factor affecting share price performance as well.
It could be, but I think not at the moment, because at the moment free float is quite healthy, and it is like increased in last year, and because of this one share offering of 2022 and also in 2023, and in 2023 it increased significantly actually.
And the last question submitted recently, considering the return on equity being slightly higher than finance sector's average and PE being proportionally higher, then do you still consider the company's stock to be undervalued?
First of all, I don't think that our return on equity is just slightly higher as opposed to the financial industry. The one reason being that, as I mentioned, it's lower in the fourth quarter because of this one-off tax charge that was booked for the whole year in the fourth quarter, and that unproportionally lowered the return on equity. For the previous let's say periods, if there was no such let's say correction, then our return on equity was much let's say with over 30%, and I am expecting that it will also be in this year. So saying that it's just the same as the banks, I think it's not correct. And if adjusted for this factor, I still think yes, we are in more favorable situation and undervalued.
Thank you. This was the last question. We've done a good job today providing answers to all the investors and other listeners. The recording of the webinar will soon be available online. Therefore, please follow DelfinGroup announcements to stay up to date. On behalf of DelfinGroup, thank you, everybody. It was a pleasure to be with you today.
Thank you.
Thank you.